Hello, folks. Brendan Chapman with you today. It's another edition of Monday Video from TheoTRADE. What an exciting day. Market finishes unched, but in reality, what this means is that we're waiting on some significant volatility, potentially from NVIDIA's earnings coming up on Wednesday, the 22nd, after the market close. So the only stock that matters, the only earnings that matters, is coming up very shortly in NVDA, NVDA. NVDA. So again, big news coming up. NVIDIA's earnings has an $82 expected move. What that means is the market's anticipating a plus 82 to minus 82 move this week, and that's the one standard deviation range. So bottom line is buckle your seatbelts. We're in for a wild ride potential this week. And, it's interesting that everything's just kind of hinging on the notion that NVIDIA is going to save the day, that everything, it's like Tommy Boy. It's like the box, it's like the guarantee on the box. NVIDIA has represented that for market and also for big investors as the one place that will not fail you. If you put your money in NVIDIA, there will be no losses, right? It's just going to perform. It's, of course, we're in an undersupplied market for chips, yada, yada, yada. We've heard this before. I mean, we don't have to go back that far to realize the last couple of times we've seen this. Certainly going into the peak in 2021, right? The chip shortage. Back here in 2018, this was the whole crypto mining craze and the shortage of graphics processors. The reality is this is only one additional instance just in the last 5 years, 6 years, where we've kind of overpromised and underdelivered in terms of the shortage of processors and the outlook. And of course, the CEO of NVIDIA does a great job of trying to portray very significant future demand, even though it looks like NVIDIA may be financing some of the potential sales that are being forecast here. And those companies may not have the money that other big buyers might have. And so what's the risk to NVIDIA? This kind of circular logic, this kind of channel stuffing type phenomenon is not uncommon. I mean, Caterpillar, go back to Apple, for example, in the past, they've kind of exhibited channel stuffing type behavior. Apple, just sending a ton of phones to China and then having to back off as the demand wasn't there. But yet we realize the short-term gain based on the projections and maybe even some element recognition of revenue that maybe ultimately has to be marked down. So as we lead into NVIDIA, again, the only stock that matters right now in terms of earnings for the broader market, it's not without risk. So for example, let's take a quick look at NVIDIA here. And specifically, we're going to look at Yahoo Finance and take a peek at the estimates for NVIDIA. So we'll go here to the analysis page and we'll get to see, okay, how have expectations changed? Have we seen positive revisions? Have we seen negative revisions? For example, this has been a little bit of a moving target on NVIDIA, but be looking here for the last 7 days. Sorry, scroll down too far. The last 7 days, you can see it has a great history of beating earnings. But look at this, for example, 24.87 to 22.95. That's a rather significant negative revision, right? We're not seeing the negative revision back here, for example, but the point is we just got marked down from about 25 to 23. That's $2 on 24. That's rather significant just ahead of the earnings. This is marked down $2. Again, think about that in percentage terms. Both of those are greater than a 5% cut. Both are significant and just ahead of the earnings. So again, what's happening right now? We're getting a little skittish. We're marking down those expectations for NVIDIA. Is it a markdown to mark up, meaning that we're marking them down so NVIDIA can beat them? Maybe, but the reality is, look, we're seeing a little bit of a diminished expectation leading into this report, which is after the market close on Wednesday. So the reality, looking at the expected move here, if we start to see a trend in earnings really backing off of those highs, this $82 potential range may be even a little small. For a stock this size, it's crazy to think about this. As we look at the recent rise in NVIDIA, we might suggest there could be a bit of skew. What does that mean? That the upside potential and a positive surprise doesn't yield the kind of movement a negative surprise would the response to a negative surprise. And certainly looking at the negative revisions here just in the last week, it suggests that, look, I mean, yeah, if we come in below those expectations, all of a sudden we could gap down to 800, possibly even down to the lows here at 750. Now, that's not the odds on bet, right? The probabilities are we probably stay within that $82 range, but I think it opens up the possibility that a surprise, a beat, may not really yield a bigger move, much bigger move. Would not yield as big of a move as a downside miss would yield if we saw that. So we'll have to wait to see what happens on Wednesday. But right now, I mean, looking at the market, you'll see materials are leading the market, industrials, communications, and really we look here, it's technology that's leading the way. NVIDIA up 2.5% today is kind of a big deal. Well, we look at the market basically unched on this session. Why is the market higher, right? Why are we not seeing a whole lot of selling at the moment? Well, we look at gold. Gold was up 0.4%. If we use this as kind of the anti-dollar, right? So gold is priced in dollar terms. So if gold is up 0.4%, the idea is that the dollar's down 0.4%. And so ultimately, the fact the market's only up minimally, given the fact that dollar's down a bit, shows that the market internally is not as strong as we might suggest. I mean, just looking at the trend over the last couple of weeks, there is an element of vulnerability here. And so if we're looking on the bullish side, again, I've continued to say this for the last month, but looking at commodities, looking at like gold, for example, gold stocks, silver stocks, looking at energy as well, specifically looking at oil /CL, we're still kind of boxed in here. But the reality is, go to product depth here. Look at the term structure, and we're going to focus on the futures here. But look at the slope of this line. It's a negative slope, which indicates backwardation, which indicates a shortage in the oil market or an expected shortage in the oil market. So as we look at XLE on the downside here, again, we had a nice little move on Friday. We kind of backed off that a little bit here today. But looking at a retest of prior highs around 99 seems pretty reasonable in XLE. As we look at /CL, how can you play oil? Well, you could look at USO. USO is benefiting by the backwardation market. What that means is that they are selling, bring it /CL here. What that means is that they're selling this contract and buying that contract. They're just rolling every day for credit. And what that means is that USO has the potential to really outperform oil here. And so again, looking at retesting prior highs at 82.50, in USO, if we go 30 days out, if you look at the skew, it's not quite as favorable, right? We see declining volatility go all the way out to the 80 strikeout here. So it's a little harder to play the spread side of it, but shooting for 82.50 and 80.82, there's a slight positive rise out here. So you're buying 22.6, selling 22.78. If you look at XLE, can we get the kind of skew you'd want there to buy an out of the money call spread, expecting XLE to get back to, let's say, 98.50? Well, we look at the June expiration again. Notice that if volatility is falling to about 96, but then begins to rise. You could buy a 96 and sell a 98 in here. It's a relatively cheap spread, about 40 cents on a $2 wide spread, buying 14.88, selling 16.9. And again, just looking at where 96, 98's right about right there. So we start to retest prior high, boom, you're done. You've got 32 days for that to happen. You can look out further, but we're really trying to focus on stuff that has skew. Now, we think about the anti-dollar. Gold certainly represents that. We looked at GLD, but what about gold stocks? Last Friday, there was some bullish option activity in GDXJ, for example. It's up 1.2% today. Today, there's bullish option activity in GOLD. It's one of the biggest gold miners out there, but this is out here in the November expiration. Let me change my layout so we can see volume and open interest, but they're buying out here the $20 strike price. Again, notice if we look closer to expiration, we have a rising vol structure. You can construct relatively cheap call spreads in here. You could buy an 18, sell a 20. That's about 10 cents there. Reduces your cost, 10 cents, $2 wide spread, and $20 is up here a little ways. But again, there's still something to sell. You don't have to wait for it to get to 20, but If it gets to 19, you're probably doing relatively well and could close it around that area. But bear gold. Well, what about silver? Let's take a look at silver prices. We'll use SLV as a proxy. A rangy day, a long-legged kind of spinning top with a small body, long upper shadow, long lower shadow. We're kind of sitting in the middle. But FSM is up about 1.37%. Yes, it's up there. But you can see the activity out here on FSM. It's a June $6 strike price. Again, we're continuing to see long call activity in a lot of these gold and silver names. And whether it's Pan American Silver last week, SLV multiple times last week, GDXJ, there's just a lot of stuff going on out there on the bullish side of the market. Now, this isn't a foregone conclusion that we're going to explode higher here. If the market does decline, we may see the dollar start to strengthen, in which case gold probably pulls back. But what we're trying to say here is what I'm trying to say is that, look, I've been saying it for the last couple of months. If we look at this GLD plus SPY ratio, this ratio broke out in early March on March 4th. And since that point in time, we're looking at the idea that gold should outperform the S&P 500, that if you're bullish on the S&P, you might want to be more bullish on gold. The expectation is it should outperform. And notice here, we're starting to break out again after a little bit of pullback. And my lines are a little amiss because this is a relative strength line as we're doing using the pairs ratio. But you draw this upward sloping line. We tested it. We're bouncing off of it. Again, gold is outperforming. So if you're looking for an area that should remain bullish, if the market is holding up relatively well, certainly GLD is one of those stocks. We looked at the falling wedge breakout here, and we are currently at the prior high. This is the short-term target for gold. But again, it's the anti-dollar. If the market's going to go higher, it needs a weaker dollar, and it probably needs yields onto the 10-year, for example, as kind of a benchmark to probably come in as well. I forgot the T and X. Hate the fact they changed the symbol here. But anyway, as you look at 10-year treasury yields, we're up minimally, but we are probably going to stay range bound here in this area. We may have a chance of rolling back to 4.6, maybe 4.7%. But that has not made a huge impact on gold of late, and they've been able to weather rising yields just because of the weaker dollar. And when you think about weak dollar, well, what about Bitcoin, right? Bitcoin is, of course, breaking out today. Nice move. Looks like we're poised to retest 75,000 again. And this is helping to lift the periphery. IBIT is more directly related to Bitcoin. Of course, we have Bito as well, more directly related to Bitcoin. But one of the areas that I like is the stocks side of it. They're not great companies. So Mara, for example, not exactly a great company, but up 14%. These companies, generally speaking, have high short interest that helps propel them a lot of times more quickly than what we're seeing with Bitcoin and Bitcoin futures. So Mara, Riot is another one here. Riot's up about 9%. Near-term target's probably around 1273. And that's almost a 20% move, and that can happen literally within a day or two. I mean, Riot has 15.9% of its float shorted. It's got a relatively lower short ratio, about 1.8 days. But the idea is that, again, you get the shorts moving. The trade today in Riot was the 24 May expiration. So this week we're buying out of the money options at the 11 strike right here. So mostly bought 26,000. Again, this helps create the gamma. We talked about this last week in my Monday video. Creates the gamma to create the short squeeze. So again, Riot, looking at retests to 13, possibly more. Some of these prior short squeezes have been rather significant and yield some bigger moves, oftentimes getting it back to 18, which is about a 70-80% premium to where we're currently trading on Riot, which is huge, right? HUT may not be the most liquid opportunity here, but we're basing for several months in here. Again, it's a Bitcoin miner. And we look at HUD, it's the 24 May expiration out here at the $10 strike price. So we get this gamma level. We start to break 10. We start to see a gamma squeeze and may lead to a short squeeze. HUD has 7.7% of the flow shorted, about 2.2 days. Not as significant as Riot or Mara. But again, could we squeeze back here to 18? It's a possibility. And with these companies, you have a chance of buying an out of the money spread, which is relatively cheap due to the positive skew. In fact, I spent my session today, 45 minutes of it, talking about verticals and how skew affects them and why skew is the way it is, right? And how high short interest stocks help create cheaper long call vertical spreads because the skew is in your favor. And so as we look at these areas here, we're looking at the anti-dollar in terms of gold and an emerging anti-dollar in terms of Bitcoin. Bitcoin's trended a little bit more towards the high beta names, but again, it's still a place or still an asset that can create kind of an anti-dollar. If the dollar goes down, they can go up, kind of a trajectory. But the short interest in the stocks help create kind of an additional kicker that may allow it to outperform Bitcoin more generally. Now, we think about other areas. What about black gold? Let's take a look at Devon Energy. We looked at gold specifically, but Devon, this has been forming what's called a falling wedge. And this is very similar we saw in one of those stocks we just watched here a minute ago. But the falling wedge we have to see is kind of narrowing here towards an apex. A breakout would yield a rise to retest 55, which is the high before the downtrend over the last few weeks. And you measure the retracement here from the low to the high. We're sitting on that 1/3 retracement. And so what happened, we saw some option activity come into this 31 May expiration on the call side of the 51 strike price. So again, not only does it give us kind of a near-term target, it also gives us a gamma level. We start to break through it. We can really start to push back towards prior highs. Now, Devon is not a company that necessarily has a high short interest, but it is one, again, that gamma squeeze potential is there. We just need the breakout from the falling wedge to help kind of garner that confirmation. CF Industries, another commodity stock. This company does ag and potash. But again, you'll notice we had this little congestion phase, consolidation phase, the breakout above average volume. We pull back, we test the midpoint of that candle from the prior day. Today we open up there and we break through the prior high. So we're going to take a look at this kind of first wave right here to that high, and we'll measure it out and get kind of a sense of what's projected. Now, this next kind of wave off the low might carry us to 80, but the trend target, the 261, is at 85 and 423 is up 92. But the fact we're seeing this breakout today, we're seeing some volume the other day as well, and we're looking at kind of that potential of getting us back to about 85 as a target. Let's come out here, let's go 60 days for July. Do we have rising volatility? No. Is it pretty flat? The answer is yes. Okay. So it's not really working for us, but it's not working against us. 80, 85 is the target. Again, looking at 80, we'll go buy deep and wide. 1 month, 2 strike vertical here. And notice that the 85 strike, there's premium to sell out there. Not a tremendous amount of open interest. You could look at other stocks in the space that are similar to this, but it costs you about $1.60 at the mid. It's not terrible there. I mean, imagine these are probably going to fill out over time. You can kind of see hundreds and some thousands in there. So I'm not too concerned by the liquidity, but the idea is it might cost you about $1.58 on a $5 spread. That's risking $1.58 to potentially make $3.42 if it's beyond 85 at expiration. Of course, we're looking for maybe about a 70-80% return on that would be reasonable. So if you could sell it for about $2.50, maybe $3 would be a pretty good target price there. And that might occur if we can get just north of 85 in here. So CF Industries on the bullish side. We also look at some high short interest stocks like QS. This is try to break out, try to get a squeeze here. We're back down again near support. Potential, again, bounce off support if we can garner a little more strength. QS has 15% short interest and has a short ratio of 8 days. What that means is that the volume, the average volume is about 6.5 million. If you look at the number of shares short, the number of shares short's about 8 times the volume. So you create a scenario where there could be a significant breakout if we start to see that gamma squeeze parlay into short squeeze. You can see back here 1 day going from 644 to 10. You get a sense of the potential here. Now in QS, this is a 31 May expiration. And you look out here at the $6 strike price, again, mostly bought. Again, we're starting to see the call option activity come in, anticipating we might get a little bit of a squeeze. And of course, that gamma, as we move through 6, eventually leads to a short squeeze and can create some very, very big moves to the upside. even though it's probably underperformed the last couple of short squeezes here over the last year. Also, let's look at another one here, Tupperware. This one that was on my list last Monday. I don't think we really talked about it, but I think we did in this video. But again, it's one that had high short interest. It has, at about 22% of the float shorted. It's about 11 days based on the average volume. And again, we get a nice move the next day. We pulled back. We bounced on Friday. We were gapped up. We faded here today. We start to break this 250 level. We could see a big squeeze, maybe back to $5.50, $6. And if we look at the 24 May expiration, again, this $3 level starts to create some significance as well. As we look at the 31 May expiration on Tupperware, 24 May expiration. Right at the $3 strike price, we got some also that are 250 strikes. So again, we start to break these levels. We start to gain traction and speed to the upside that may facilitate a short squeeze. Back here, it went from about 59 cents to about 5.89. Boy, if we could take out the high at about 250, that might be a trigger that you look for. And look at this thing maybe getting back to 550. Now, as you look at the options on this, there's, can you construct verticals? Yeah, you can, but it's going to be pretty short between the strike prices. So you could go out here 60 days and just buy an out of the money call. The volatility is high in here. The bid-ask spreads are wide. Makes it tough to trade. Cat's a little bit out of the bag. You're going to take a bit of a haircut here, but this is an interesting one to see a continuation. But again, there's a lot of ones out here. Now, quickly on the bearish side, it's not all bullish, folks. We're starting to see a little bit of bearishness come into DLR and REITs in general. Digital realty, we kind of gapped up here. We sold off. We've rallied again. Now we're seeing things kind of turn over a little bit, albeit on lighter volume. We could look for maybe a trade below the low of today. But DLR, we're looking at a July expiration, so it's a ways out there, 60 days out, and you can kind of see the 135 strike in here. So again, we're looking at downside put option buying activity here, and again, it's just reflective of the downside expectation. The fact we're kind of elevated here, 135's all the way down here. It's looking for a much bigger move, and again, if we get that, if we're seeing that kind of move as a possibility, these options might appear to be relatively cheap. AGNC as well. Another REIT for AGNC. We saw the kind of slide and then big rally recently. So we got this nice move. I was expecting this thing to roll over here. It kind of rolled over initially. Then we've rallied very quickly. But on AGNC, this is a June expiration. And again, 32 days out. I'm the wrong one here. Yeah. 28 June. Thought I had it. Oh man, I must have missed it. All right, so I can't find it. I had it written down incorrectly. Sometimes you go too fast. Let's take a look at option time and sales. Let's clear this out. Let's just look at the put side. Take off the series. Sort by quantity. So 21 June. I have to move on here. I'm going to look really quick. $9 put. 14 June. Yeah. Oh, well. I guess it's not there in AGNC. Let's look at sorry. You can use something like an IYR as a proxy. Sorry about that. But again, breaking kind of that low of the gap day here, expecting yields to rise on the 10-year. These are interest rate sensitive stocks. Generally expect a little bit of downside activity. What about the consumer? Let's look at Capri. We've been consolidating here at a support level we achieved earlier, kind of middle of the last year, about a year ago. We're kind of testing that same area at the moment, 3-year weekly. If we break this, we could look for a bigger move down in Capri Holdings. We look at right now, the June expiration here. I'm going to mess this one up too, aren't I? Clearly got my wires crossed on a few of these. Let's look at July. Man. Oh, 17 Jan. This is saying sold. I must have wrote it down wrong. That could be closing. 35, 35. Yeah. It's probably closing activity. Sorry. Forget this bearish activity. We'll stop there. Let's look at American. Yeah. So this one right here, American Airlines, the $15 strike, 23,000 contracts traded, mostly bought. Again, you can look at something like jets. If energy prices begin to rise, can it create a little bit of a pressure on these companies? We're up against kind of resistance right now, just looking for maybe a retest of prior lows. So again, I'm expecting consumer stocks to kind of pull back right now. Airline stocks certainly. We're looking at still the squeeze in some of those remaining high short interest stocks if the market remains bullish. Of course, we're expecting gold and silver and Bitcoin related companies to outperform the S&P if things remain relatively subdued in terms of the selling. And of course, all eyes on NVDA with its earnings coming up here. That could be a very big day. So again, with significant volatility potential, again, the $82 expected move. So expect the unexpected here. And that may mean we may have bought the rumor already in NVIDIA. We may be poised to sell the news. We looked at the negative revisions. Maybe that's forecasting a little bit of a dour outlook going into the earnings and an expectation that they may miss. Again, hard to believe we're going to miss. Hard to believe the stock's going to go down. But at least expect that if there's a positive surprise, we may not get the lift out of it you might have otherwise expected, meaning we may not go $82 the upside. We might just gap up 40 and that's it.